Most people are spending $1,200 a year on financial advice that I will give them for free in under 30 seconds, and I switched 6 months ago using this exact setup. Charlie stood at the counter of a Rolls-Royce showroom on a quiet Tuesday morning, not in a rush, because he already knew the numbers worked. He looked at a traditional budgeting app on his phone and saw a notification that he spent too much on lattes, which he ignored with a look of pure boredom. So I started looking into why some people seem to glide through market volatility, while others panic every time a headline hits. The data reveals that we have entered the algorithmic era, where machine execution has completely replaced human intuition as the primary driver of wealth. According to world metrics, algorithmic trading now handles roughly 70% of all United States equity volume as of February 2026. The reality is that most of us are fighting a war with sticks and stones, while the institutional players are using orbital lasers. Charlie already understood this shift years ago and moved on to building systems that do not require his constant attention. He knows that the gap between tech-enabled investors and manual investors is widening faster than anyone expects. The current market is no longer driven by simple inflation or interest rates, but by AI-driven earnings expectations that push the S&P 500 to new highs. While the average professional is still manually updating a spreadsheet on a Sunday night, the real money is moving in lockstep with these automated systems. This shift means that the old way of managing money is not just slow, it is actually dangerous. The part that surprised me most was realizing that almost every finance app is designed to keep you in a defensive crouch. Most of these tools are just fancy spending trackers that give you a psychological sense of control without actually growing your net worth. I spent 3 years tracking every single coffee and subscription, but my actual wealth barely moved because I was focusing on the wrong side of the equation. Look, when I first tested the idea of active trading to break out of that cycle, I thought I could outsmart the market. Charlie was in a private aviation lounge when he suggested that I should just start day trading to get rich quickly. I had to stop him right there because the data from World Metrics shows that 85% of day traders lose money. The truth is that retail traders now account for only 16% of total United States stock market volume, which means the house always wins. We are trapped in a budgeting loop where we save pennies, while the institutional AI systems are capturing the real gains in the AI infrastructure race. This is exactly why I stopped trying to optimize my spending and started optimizing my execution. The frustration comes from the fact that we are told to be disciplined with our budgets, but discipline cannot beat an algorithm that trades in microseconds. I realized that tracking where my money went was a waste of time when I should have been automating where my money was going. This realization changed everything for me because it shifted my focus from defense to offense. So I ran an experiment to see if I could replicate institutional research using the free tier of ChatGPT. The problem was that I was spending 4 hours a week reading earnings calls and trying to guess which AI sectors would actually scale. I started feeding the raw transcripts of the top 10 S&P 500 companies into ChatGPT and asked it to identify specific revenue drivers. The result was a detailed analysis that highlighted exactly how AI earnings were driving index outperformance, which used to take me an entire weekend to synthesize. I found that by using specific prompts, I could identify a 12% surge in NVIDIA momentum before it became a mainstream headline. The output was not just a summary, but a weighted list of risks and opportunities based on actual corporate spending. Charlie would have found this process tedious, but he loves the result because it removes the emotional guesswork from the equation. He stopped reading the news and started reading the data, which allowed him to ignore the noise of the daily market swings. I discovered that I could reduce my research time from 15 hours a month to about 20 minutes. The most important part of this is that I stopped asking the AI for financial advice and started asking it for data synthesis. When I asked for a recommendation, the results were vague and preachy. But when I asked for a comparison of capex spending, the numbers were precise. This approach allowed me to spot the capital rotation away from European equities and into US AI stocks with total clarity. The difference between the old way and the AI way is the speed of insight. I was no longer waiting for a newsletter to tell me what happened last week, but instead seeing the trends as they formed in the data. This is the first layer of the wealth stack, where the AI acts as the brain that processes the noise into signal. But here is the part nobody talks about, which is that analysis is useless if you still have to execute everything manually. I decided to build a nervous system for my finances by linking Google Finance to Gemini using Zapier. The goal was to create a loop where a specific price trigger in my portfolio would automatically trigger a deep dive analysis in Gemini. The process involves setting up a Google Sheet that pulls real-time data from Google Finance for my core holdings. I then used Zapier to send that data to Gemini whenever a stock moved more than 5% in a single day. Gemini would then scan the latest SEC filings and news to tell me if the move was a structural shift or just temporary volatility. Charlie attempted to link Zapier to Google Finance while sitting on a penthouse terrace in the financial district, but he got momentarily overwhelmed by the plumbing. I had to show him that the actual setup only takes about 30 minutes once you have the API keys in place. Once it was running, the system eliminated the need for me to check my portfolio every single hour. The result was a massive saving of over 15 hours of manual work per week, which I used to focus on my actual career. I stopped feeling the anxiety of missing a market dip because the system was watching the numbers for me in real time. This automation turned my portfolio from a source of stress into a background process that just ran in the silence. Look, the data on this is wild, because it allows a corporate worker to operate with the same surveillance capabilities as a small hedge fund. I found that I could track the expansion of AI-native financial automation at companies like Bill Holdings without ever opening a browser. This is how you move from simply tracking your spending to actually managing your wealth like a professional. The thing is, as these tools become more common, the actual edge of picking a winning stock is starting to disappear. I noticed that tech-focused hedge funds now have a correlation of roughly 0.96 with the S&P 500, which means alpha is decaying. The winner in 2026 is no longer the person with the best tip, but the person with the fastest execution system. I started using AI-driven portfolio management tools, noticing that firms like Wealthfront and Betterment already manage over $160 billion in assets using these systems. I realized that trying to beat the index manually is a losing game when 70% of the market is run by machines. So I shifted my strategy to a hybrid model where AI handles the rebalancing and I handle the high-level allocation. Charlie sat at a Michelin-starred restaurant and watched the market dip on his phone, but he did not feel a single spark of panic. He had already automated his rebalancing triggers, meaning his system bought the dip while he was ordering a tasting menu. He did not have to be smart in the moment, because he was smart during the setup phase. The most surprising insight I found was that the most successful investors are actually the ones who do the least amount of manual work. By automating the boring parts of wealth management, I eliminated the emotional errors that usually lead to selling at the bottom. I stopped trying to be a trader and started being a system architect who happens to own assets. This is the final layer of the stack, where you accept that the market is efficient and you focus on the efficiency of your own habits. I found that by automating my contributions and my rebalancing, my portfolio growth became a mathematical certainty rather than a hopeful guess. This is the only way to survive in a market where the institutions have a permanent speed advantage. The truth is that most people will keep using AI to track their lattes, while the top 1% use it to build empires. It is time to stop tracking and start building, so subscribe to the channel for the full automation library. I am sharing the exact prompts and Zapier workflows I use to keep this system running. When I look back at the difference between the corporate worker struggle and the automated wealth reality, the gap is staggering. One person spends their weekends in a state of anxiety, manually logging expenses and worrying about market crashes in a spreadsheet. The other person has a system that synthesizes data, triggers alerts, and rebalances assets without a single manual input. Charlie was relaxing on a superyacht deck when the notification came through that his monthly returns had just cleared his travel expenses for the year. He did not check the news or call a broker because he knew the AI stack was running the numbers in the background. He had replaced the innocent habit of manual tracking with the professional habit of systemic execution. The key takeaways are to use ChatGPT for data synthesis, Gemini and Zapier for automation, and to stop chasing alpha in a machine-driven market. If you can move your financial life from a manual chore to an automated process, you win back your time and your sanity. If you want to see the actual prompts I use to make AI perform deep dive equity research, you will not want to miss the next video. I am breaking down the specific hedge fund prompts that turn a standard AI into a professional analyst. Subscribe now and hit the bell so you can build your own wealth engine.